Hello, you're watching InstaForex News. Over time, it has become clear that the Federal Reserve System is going to raise their interest rates. In this connection, the banks with big securities portfolio of the U.S. Treasury Department will likely to have some difficulties. In the financial year ended on September 30, the American government sold the exchange bills and bonds in the amount of $1.8 trillion with the purpose of financing the economic priming package. Primary dealers are the companies which work directly with the central bank and guarantee the bonds placed at auctions of the U.S. Treasury. They had reserved a huge volume of the U.S. state debt papers. This purchase was financed by funds of the FRS quantitative easing program. Within this program, the central bank buys treasury bonds and mortgage-backed securities in the secondary market. Usually, the dealers resell security papers to their clients, but the FRS report presented last Thursday testifies that the primary dealers hold a substantial volume of treasury bonds acquired during the financial crisis. According to the funds flow report prepared by the Reserve System, the brokers and dealers of securities market is in the main participants category of the Wall Street trading. By September 30, the size of acquired treasury bonds reached £110 billion. From the end of the last year till this October, risky securities were rising on the fast track. Under usual conditions, this would mean a good opportunity to dispose of low-profit treasury papers. The bank's dealers are not the only who collect the state bonds. Commercial banks have bonds amounting to $189 billion. This is a significant volume of the U.S. debt commitments holding among major institutes of the American financial system. The volume of acquired treasury bonds by dealers and commercial banks are rather big, while these portfolios are vulnerable to price fluctuations in the period of economic recovery when the FRS is thinking about removing the stimulation measures. Especially it is related to long-term treasury bonds. With these papers, the banks receive very high premiums, while the key interest rate of the FRS is near the zero level. It was Forex News provided to you by InstaForex News team and me, DEC Fundamental. Thank you for watching us and goodbye.